Welcome back to Crown Confidential Podcast, where powers speak in private.
Today's topic is money secrets bank don't tell you.
Have you ever wondered why some people get approved for a home loan faster, secure better rates, or build wealth more effective than others?
Today we're uncovering some of the financial insights that banks don't always explain clearly. And to help us do that, we have a very special guest, bank manager at Regions Bank, David Micena. So stay here.
Grab your coffee or wine.
This is Crown Confidential Podcast.
Welcome back, everybody. Welcome to Crown Confidentials again. Today, we have a special guest. His name is David Micena.
David, thank you so much for being here with us. I know that you have an amazing story, a great background. So tell us a little bit about yourself.
All right, so thank you so much for having me here. It's a pleasure to be part of it. So telling about myself, I've been in the West for 18 years now. I'm originally from Brazil. So I came back in 2008 with that crisis. We probably remember the crisis we had in 2008 here in the West. That's exactly when I came. And I work in the commercial real estate for many years. I was in Texas, then Georgia, and finally New York for 10 years. So my bread and butter was commercial real estate. I was involved in buying, selling commercial properties across this country. I used to travel back to back, coast to coast, and it was a very exciting moment. But then the pandemic came and changed the game completely, As you know, commercial real estate really collapsed, especially in New York. So I moved to Orlando 4 years ago, and I work as a business broker, helping small businesses to succeed. And then I was invited to join Regions Bank as a branch manager to bring this commercial experience aboard, and has been really successful.
That's great. That's great. So you are a manager at Regions Bank. Tell us a little bit about your role there and what exactly is it that you do?
Yeah, so I'm a branch manager for Regions Bank of the retail sector of the bank, and my role is to help people with their financial solutions. So we are interacting with customers every single day, all day long, and try to understand what they need and provide financial solutions. I would say the banks are pretty much the same. They have same technology. The interests are determined by Washington, D.C. What makes a difference is the relationship we establish with the customer. I think this is the most important part of my role. Make sure you have a good relationship with your customers.
Okay, great.
David, so before that one, I want you to know more what is behind David Micena. How did you arrive to America? Because we're Latinas too. We want to know a little bit more about, a little bit your background. How did you arrive? Why did you choose America? You came here with, we want to know you more a little bit.
Very good. So I was in Brazil working with IT. I was working with IT field in the IT industry. Was very exciting, especially the early 2000s. And all of a sudden, my boss back then, who has business across the world or worldwide, he asked me, David, do you speak English? And I told him, well, I just know English from programming. That's it. It's very technical, nothing more than that. And he asked me, do you happen to speak Spanish? And I said, no. And he asked me, do you want to go to the US? I said, yes. So I saw an opportunity to grow, to develop my professional skills. And I surprised my wife with the news. Let's pack. We are moving to the US.
Oh my
go,
gosh,
let's
we want that.
Exactly.
And now you speak Spanish and English.
This is still a work in
And Chinese,
process.
if you can
And now Chinese, right?
Well, so we came to the US. I was in my 20s in 2008. And we came in a moment very interesting because the country was facing a terrible crisis.
Yes.
So you came in the worst time of America.
Exactly.
You didn't see that before you coming to America. You weren't searching out.
Well, Kath, you probably know if you compare the worst moment in America to the moments in our hometown countries, it's still better.
Okay.
Correct.
But what caught my attention was the resilience of the U.S. economy. Although we are facing this terrible crisis, in 1-2 years, we start seeing a very strong recovery. So that's what makes the U.S. the first country in the world. So I saw that in 2008. I saw that during the pandemic in the 2021. So those cycles happen, but you see how fast the country can recover.
That is correct.
And it's something that you don't see as much in our countries, like, well, Latin
It
American
takes time.
countries. Yeah, it takes
Yes.
a lot.
Exactly.
for
I have a
sure.
chance to go back to Brazil a few times, And I had a chance to go to certain places, and I was amazed. After 20, 30 years, most of the areas remains exactly the same.
Wow.
So progress happened at a very, very slow pace. Here in the West, especially in Central Florida, Orlando, we see a growth that is unbeatable. It's like every 2 years, all demographics is changing, all developments happen, and I love to be part of it.
I
Yes.
love to hear that, that you just take the risk and you say, pack everything, we're going to America. That's something happened to me the same. So I feel very inspired with
Nice.
that. David, since now you have a lot of experience and everything, all the background that you have, I want to ask this. What is the biggest mistake you see people makes every single days with the things that you have? You're already in the bank, you're also real estate as well, right?
That's a very good question, Kat. As a matter of fact, that's a very good one. And I would say the most common mistake you see is people spending first and investing afterwards, whatever is left. So the right thing to do would be to pay yourself first, then invest or spend whatever else you have. But if you change that order, that priority, you can get financial problems. So when you get your money, understand the dollar you save worth more the dollar you make. If you can invest first, pay yourself first, that's the number one recommendation I would give to my clients.
Let's invest first.
Yes.
Like it.
Perfect, perfect. And what are some of the money moves that you see that wealthy people do that regular people don't do?
Yes, wealthy people or successful people usually they look for investments like income-producing investments.
Okay.
For example, commercial real estate is a great source of income, and also diversify their portfolios. So it's important to look for a tool that can give you back what you're investing, and understand time is the most important factor in investing. Doesn't matter how much you invest. It's important to invest even small amounts, but steadily. So long term, you pay back.
So
Great.
let's invest. Uh, if we say in that one, you say let's invest no matter the smallest amount. If someone had only $1,000 to start changing their financial future, what would you tell them to do first?
I would say have an emergency fund, prepare emergency fund because life happens,
Yes,
things
that's
change,
very important.
and then start investing.
How we can start? Like a person just starting, having. I only came to America with $1,000. They say, how we can do? What would you recommend? Hey, David, I'm here 1,000. What should I do with my
The
1,000?
first thing I would do, Kath, respecting any individual needs, would have this emergency funds prepared and then start like with a high yield savings account where you can have full liquidity, you can have access to the funds whenever you need, but at the same time, it would be producing some interest for you.
How much will be the baggage for the you say the starting? How much could be like
Well, you can
1,000?
start with little. I would say you probably remember that, Kat, from your childhood. Remember when your parents give you some money, you
the
set
little
something
chanchito,
apart.
yes.
Exactly. Well, that's perfect. You are telling them what they should do in the future. Today, unfortunately, people maximize their credit cards. They don't understand how to use credit, for example. Credit should be used for convenience, safety, and rewards. Period. I would say you shouldn't using credit cards to finance a lifestyle. Understand?
Right.
So you have to really be prepared to set apart part of your income. Let's say if you have $1,000, you have to pay your bills, you have to help your family. But if you can set apart, for example, 20% of it, let's say $200,
Okay.
that's a great win,
Oh,
right?
okay.
But now we have other circumstances. For example, some people they are with high interest debt. You have to pay that debt immediately. For example, if you ask me what is the average interest rate on a credit card, let's round up 23%
Yes,
or so.
really high.
Wow.
Really high.
Yes.
Exactly. Again, because for convenience and rewards,
Right.
not for lifestyle. If you have $1 and don't know what to do with that $1, pay towards that credit card immediately because you just made a 23% investment, which is insane. So paying high interest, debt is one of the priorities. And then save for emergency funds and start investing consistently. That's the key when you see successful people uh, build wealth
So first,
and go forward.
save for the emergency, and then you say start investing. How we can start investing? What is the next step after saving?
I think we can put it this way. First, if you have high interest debt, you start attacking it
Right.
yesterday, immediately. Second, you should have this emergency fund. Typically, it's recommended to have at least like 6 months of your income saved. If you don't have it yet, just start it. I don't have 6 months, but now I have 1 week, 1 month, 2 months. Once you complete that, you paid high interest rates, that you have emergency fund, now you can start invest. There's several products uh, tailored for their needs. It depends of your how aggressive you are in terms of investment, how much time you have, which stage of your life you are. If you are a teenager, if you are a college student, if you are an adult, if you are an elderly person, it depends of the stage of life you are. But there are several products tailored to help your needs.
And I know that we touched on the high yield savings account, but I feel like a lot of people don't know what a high yield savings account. They just kind of hear about it, like it's the best way to save money, especially like you're saying, putting those 6 months away for an emergency. 6 months, if you put in a regular checking account, it's not going to grow. But if you put in a high yield savings account, it's going to grow. Can you go into a little bit more detail of how a high yield savings account works and in your experience, what you see that most people do with those high yield savings accounts?
Yes, certainly. I would say if you have extra money, you can put a high yield savings account. You're going to be producing interest for you while you're sitting there. And at the same time, you have liquidity, which means if an emergency comes, you can access the funds immediately with no penalty, with no loss. At the same time, if you have a portion of that money that could wait for a year, why don't explore other products such as CDs?
Okay.
For example, because you have a higher interest,
Okay.
sometimes higher than high yield savings account, although you don't have liquidity. But if you can wait like a year, at least you can have a portion of it making much more money for you in a faster pace. When you do a CD, you are actually lending money to the bank. That's why we have a higher interest.
Let's make a highlight there. CDs. What is
Yes.
the CDs? Can you explain to people that doesn't know what their CDs are?
Yes, the CD is a certified deposit account where you literally lend money to the bank. So you put some money, for example, you put $1,000 there for a term of 12 months. You're going to have a higher interest compared to high yield savings typically or money markets. But at the same time, you understand if you touch that money before that 12 months, you're going to have a penalty. So it's not
will.
you will incur in a penalty. Yes. So that's why we have to plan in advance. If I don't need this portion of my money in the next 12 months, I will lock in a CD, I'll lock the rate, I'll know exactly how much you're going to have by the end of it. So a lot of predictability. But at the same time, you can project your finance. But if there is a portion that we can't wait 12 months, you can live in a high yield savings or a money market because you have full liquidity at any time.
Okay.
One of the advices that I give to people when they say, well, how can I save up for my down payment for a home? You know, since I'm a realtor and I get calls about it all the time, and I see that it is hard for people to save, is I tell them just open a high yield savings account, a separate account completely, and just start putting money there because it will multiply. Even if it's a 3 or 4%, a lot of the times people don't see that as a big difference. But if you're putting $150 a week in an account and your wife is putting $150 a week on that account, by the end of the year, you're going to have about $15,000, and that's enough for a down payment. So, and then plus a high yield savings account is going up. The funny part is that a lot of people are like, oh, 4%, that's not a lot. I'm like, you're paying 24% interest rate on a credit card and you're okay swiping away. So it's not a lot when it comes to you, but you're okay paying 24 when you're paying a bank. So that's the mentality that we have to educate customers on, right? Where they don't see 24% as a credit card like a high interest, but they see 4% for them as low, right?
You're spot on.
Yeah.
Because it's true. So why don't you take advantage while your money is sitting there in the bank account? If you live in a regular checking account, usually you're going to have 0%.
Yes.
So the bank is making money with your money. Why don't you have get a slice of it? And if you have, for example, a high yield savings account for a down payment, and you keep investing, you experience the great thing called compound interest.
We like compound interest.
It's great. It's great, right?
Yes.
So you can have the multiplier factor, and with time, it really, really works.
And we want to be on the right side of compound interest. We don't want to be on the wrong side where it's
Yeah.
where you're paying credit card debt and then it's just harder to pay because you're paying $500, but then you see that $200 is going towards the bank and towards
And you never ends to
yeah, it
pay
just never
all the
ends.
time. The circle. That's very interesting, honestly.
And I can tell you, is for us, we also do in our bank mortgages and HELOCs,
Right.
which is a home equity line of credit. And it really is really rewarding for us when you see like a family fulfilling their dream. They save a lot of money for a long time, but in the end, it pays back because they can finally fulfill their dream.
Right.
And some of them, literally during our closing, they cry in front of us because it's a great milestone in their lives.
Yes.
And
We
I'm
love that.
and you are in the industry, you know what I'm
Yes,
talking
yes,
about,
it's
right?
very rewarding. It's definitely an industry that it just gives back a lot. And it's great to see families when they start from zero, like she was saying, from $1,000, and they actually save, and you see that money, grow, and then you're able to help them buy that house. Now, I know you touched on a really good point with HELOCs. There's a lot of people that have a lot of equity. They're basically equity rich. And I'm sure you've seen it all. You've seen the good and the bad because I've seen some mistakes made from pulling that money out of their home. What are your recommendations with the money that they have in their equity? What's the right way to use that HELOC?
Yes, HELOC is a very popular product, especially in my branch. We've been able to help many customers, and is a very interesting tool if you know how to use it.
Exactly. You have to
Because
know how to use it.
yes, that's correct. Because as you mentioned, a lot of people they have a lot of equity in their properties. If they know exactly their goal, we can have a very good conversation together, make a financial plan, and identify what is best for them. A HELOC, or maybe a HELOAN, or maybe a refinance in some cases. So basically, there is plenty different products to help the customer. But I would say a very good conversation helps to identify the needs and make great recommendations. HELOCs, for example, is one of the cheapest options when it comes to interest because the property is the collateral.
Right.
So we have all the funds protected. And HELOC gives the option to apply for it when you know what to do, or even say, well, I don't know yet what to do, but I want to be prepared, ready when the time comes. So we're going to have the line of credit ready for you, and you can literally organize ourselves in terms of timing schedule. Also, some people, and I have done for some customers, they have a lot of equity. They don't need the funds now. They don't need the line of credit, but they do that for protection. Because once you have a HELOC, you're going to have a lien on the property, which gives you an extra shield, an extra layer of protection in case someone crazy tried to do something stupid with your deed. They cannot. Because the HELOC, yes, the HELOC protects your property.
Right. I have been seeing that where there's a lot of deed fraud. So especially if the property is paid off, like you have to be really, really careful with that. So that's a really good, interesting point.
Yes, it is. And there is plenty of information we can certainly provide if they need it.
That's great.
Talking about the credit cards as you were talking, so what we could say, what is the best way to use the credit without getting trapped into debt?
Kath, I love that question because you have no idea how many times I had good conversation with clients, with customers, and they were like, "Wow, that's the first time I heard about it." I think we can go to the basics. As you know, as a good practice, you should utilize maximum 30% of your total credit card limit. This it helps you to build your credit over time and to make sure you have a good standing in terms of score. Also, if you use a credit card for convenience and rewards only, again, not to finance a lifestyle, you can pay it every month. Don't wait. Credit card is expensive product, but very good for convenience, for safety. For example, you are traveling. Why are you going to use your debit card overseas? No,
Right.
you can use the credit card overseas. Usually, most of financial institutions, they don't have a international fee, so it protects you in case you have to dispute a transaction. That's the credit card is designed for.
That is important, David. When
It
I
is.
moved to America, I didn't know how important it is to get a credit card and the points to get a loan, like a car, or even to get a house to live. When I just moved here in Peru, we just use credit card when you really need it, when you really need that. But here in America, you have to get credit card. So for the people who's looking at us right now and they just planning to move from different countries to America, it's important for them to know that how important is to get a credit card, but use it smarter in the way that you say, right?
Yes.
Because we need it. Somehow in America, we need that credit cards
Yes.
to apply, to live, to get cars or
To
something.
get a home loan.
Home, yes.
That if you don't have at least $1,000 credit card, at least 3 trade lines, right? Then the bank says, well, can't give you a home loan. You know, what are some of the secrets that you
Tell us the
have?
secrets.
Yeah, tell us the secrets.
We want to
that-
know the
What
secrets.
banks want to see in your credit, or what are some things that they definitely want to see in order to get that home loan or even business loan?
Yes. We have different type of loans. Let's go with the residential, for example.
Okay.
Talking about residential loans, typically is going to be focused on your personal credit. We just spoke about credit cards, how important it is to just keep, let's say, 30% of your limit and pay every month. So it create a very good history. And when it comes to commercial real estate, it's more based or focus on the property income, which is another story. It's more complex and riskier. But coming back to the personal loans and what the bank is looking for when it's time to apply for a loan, you look for a credit score. That's really important. Not only the fact you have a good credit score, but if you are consistent in your payments, the history matters in that case. Also, something we call debt income ratio. You need to know how much percent of your income is compromised with your current commitments. You can have a very good credit score, but you also have a high DTI, we will call debt income ratio. It can really affect your application, or vice versa. Sometimes your credit's not that good, but since you don't compromise most of your income, it can be leveraged towards your success in the application. So different factors matter. For the bank, it's important to know your capability to repay the loan. That's really important. And also, if you have a good credit history, if you have different diversified types of credits like auto loan, if you pay a credit card on time, and also is important to know your tax situation the last 2 years. It's really important as well.
Okay, yeah, and that's one thing that I explain to a lot of my clients because they tell me, okay, I have a 720 score, but when we actually go into the credit, they have 3 credit cards and they're maxed out. So then the bank is,
What should I do for
you
you?
know, they don't want to see that. So even though they have a good score because they're making their payments on time and they have a long history, they're maxed out. Their debt to income ratio it's super high. So we have to start working, what you said before, working on that debt. It's gonna keeping the debt low. It's gonna be the best. I always tell my clients, less debt, more house. So that's the best way to explain it. The less debt that you have, the more house you can afford.
That's correct. That's correct. And you know, many customers they sometimes don't know about special programs. Like we have a special program for VA loans, veterans loans. We have a special discounts for first-time buyers, for first responders. So there's plenty of options. I recommend if someone is watching us now and looking to buy a house or property to look for professional help.
Right.
Sometimes you can search some information, but it's always good to sit down with someone who are a specialist or professional and discuss the options because there are plenty of options available there.
Yes, absolutely.
Nice.
And moving now to business. So we kind of talked about homes. Let's talk about business loans. If somebody wants to start a business from zero, what are some things that you can recommend as a bank, and what are you guys looking for to give them that business loan for them to get started?
Love that question. The very first thing someone who start looking to start a business is separate personal finance and the business finance.
That's a good tip. That's really good.
Yes, for sure. It's a big mistake I've seen. And you can open a separate bank account only for a business and make sure they are completely separate. That's the number one recommendation. And there's plenty of options. For example, we do offer credit cards for business.
Right.
And there is a special hint here. While with the personal credit card, you are suggested to use only 30% of your total limit. When it comes to business credit cards, it's different. You can use it literally 99.9% of your limit.
Oh, wow.
As long as you pay on time, because it's designed for this to work as a work capital for your business. So it's a great tool
So
to use.
it's a tool.
And that is
Yes.
expensive too to pay the rates and everything for credit cards and in
Well,
the business?
Well,
I guess it's more, right?
yeah. Well, for example, most of banks, including my bank, we are able to provide with 0% interest for the first 12 months.
0%?
Exactly.
Wow.
Great.
Which is great for business, especially in their first year.
Right.
Also, we do offer rewards. If you have to pay for business expense, you can have a lot of rewards because usually business have a lot of expense, right?
Yes.
And not only that, we also have SCBA loans, which is a great tool where we can have it supported by the government, and the SBA loan have long terms and is very attractive when it comes to fund your new project or new business. Also, we have line of credits only for businesses. We have several different products to help you achieve your goals. As a business owner, I typically ask them, what is keeping you up at night? And usually it's lack of cash flow. So why not utilize the bank's resource to fund your cash flow while you're growing your business?
Yeah, the first 5 years is hard because you're growing and you're spending. So the fact that you guys have the 0% interest rate and also have points or cash back for them to use since they're constantly spending, that's definitely a great advantage for any new business owner.
Yes, it is. And also, we offer merchant services. We can minimize your cost of collect payments from clients. We also have some products where we can help your clients finance your services. So you can provide financing to your customers, to your clients. So there are several products out there to help business to succeed.
So for those
great.
people who are seeing out there as well, and they are outside the country, Peru, Puerto Rico, Brazilian, so there is opportunity for them to come to America because America also offers many ways to them to help them to start the business here, right? In the banks in some way. Like, do you see those people who came different countries and they starting the business from zero and they're scared or they don't know how to invest? How the bank could help?
Yes. I would say, Kath, people who come from Latin America, for example, other countries, who comes to America, they already did a very important step, was to have the courage to just move to a different country, different culture, different society, and is still looking to build something for their families here. So they have it in their professional habits to work hard to build something for their families. And as a bank, we do offer several solutions to help them to achieve their goals. Again, they need to look for professional help, the right people at the right moment, and I'm sure they're going to succeed.
Nice. Oh my gosh, that's so cool.
And everybody always asks, or everybody always says, like, oh, what was the best advice somebody gave you? But nobody ever asks, what was an advice that everybody gave you, but then with your experience and with time, you realize, wait, that wasn't even a good advice. Like, what do you think that would be?
Yes, unfortunately, we see some people out there selling quick money or quick solution or get rich quick. It doesn't exist. There is no free lunch out there, right? So I would say be careful if something seems to be too good to be true, probably it is. So I believe in hard work. I believe that wealth can be built, but over time. So don't look for shortcuts. Look for right tools, right professionals. Do what is right and for sure gonna get a
I
good
agree with
result.
that 100%. I feel like nowadays, especially with social media and everything is 1 minute video. So of course, do you see the struggle like in 30 seconds and then all of a sudden the success, or they just bought this stock and now it's $1 million later. You know, they see everything so fast, but in reality, what we know it from the business is that it takes time to build wealth. And especially in real estate, if you see something that is too good to be true, usually there's something
Question
there.
about it.
There's something there.
I read a quote a few days ago and I laughed a lot because it was so interesting. It said something like this: you want to get $40, become $400, get that $40, put gas in your car and go to work. So yeah, there is no free lunch. You have to
Yes.
work hard
tough.
for you and smarter for your success.
So coming back, and this is you're talking about the commercial and residential. Tell me, what is the secret? Is it more faster? Which one wills well faster, commercial or residential?
Typically commercial,
Commercial. Why?
because it involves large amounts, large operations, and the opportunities are greater than residential. But
But the risk too.
the risk is higher. That's correct.
So how
that's
do we know? How do the people can know which one is okay? I have money to invest in commercial one. How do they gonna know that it's not too risk?
yes, it's important to have a business model, a business plan well prepared. As you know, statistically, most of the new businesses, 70% of them doesn't survive the first year. While
70%.
70%, it's scary. While most of the franchise, for example, 70% of them succeed. So why? Because there is a business plan. There is a very well designed and tailored business model to be followed. So if you are going to start a new business, make sure you have experience, make sure you understand what you're going through, and also get professionals involved. A good banker, a good lawyer, a good accountant. So make sure you have professionals helping you to succeed. Also, it's important to understand that when you start a new business, the first few years is going to be a lot of work, more than ever, and the return of investment can take a while. So make sure you have some reserve to survive those first years.
Okay, that's a good advice, definitely.
That's great.
Wow,
Thank you so much.
David. Thank you so much for being here. You help us a lot, and
It's a pleasure.
And if people want to find you out there, do you have social media or do you want to provide an email so they can reach out to you if they have any questions about business banking?
Yes, absolutely. So I'm based here in Orlando, Florida. So with Regions Bank, my Instagram is at David Micena, which is my name, last name together. And I'll be more than glad to help. I've been glad to assist people. I also part of the Brazil America Council,
Right.
which is a council who try to help business owners to succeed here in the America. I also part of the Central Florida International Chamber of Commerce with the same mission, and I'm also the advisor for the Global Chamber here in Central Florida.
Oh, wow.
Yes, so we always look to be connect with business owners and help them to achieve their dreams. Because financial part of our lives is really important, but there is some guidelines you have to follow to make sure you don't get trapped in some problems, which is, again, look for professional advice whenever you can.
Right, right. You have to know the rules in order to take advantage of the programs that are out there.
Yes.
Well, thank you so much, David,
Thank
for
you,
being here with
David.
us. And we appreciate you being here. Thank you.
thank you so much, David. So this was another episode of Crowd Confidential Podcast.